Hello YouTube, Chris Word. If you want to understand insolvency and navigate the minefield that corporate insolvency can be, please subscribe to our channels, give us a like, give us a comment, help us boost up those YouTube rankings. So today's video is aimed at personal service companies. There are hundreds of thousands of people in the UK who are classed as contractors. And there's been a big change in April this year, the IR35 tax reforms, which have meant huge changes for this industry. We have had countless amounts of inquiries from contractors from all different sectors: financial services, banking, oil and gas, railways, BAE. Now, what's happened is these tax changes, this tax reform that came in April this year, has meant that lots of contractors, sort of one man and one woman bands, have either had to go through an umbrella company or get a PAY position with that company that they have previously contracted for. And this has left a lot of people with not really knowing what to do with a limited company, because many people literally don't have a need for it anymore. So I'm just going to help you run through the options of what you may do with that limited company if you've had to get a paid position or go through an umbrella company. Now, the first question to ask yourself in a lot of these situations is that company solvent? So what that means is, can the company pay its debts when they fall due? Now, if the company can pay off all its debts, you may want to consider something called a members voluntary liquidation. It's like a solvent liquidation where you appoint an insolvency practitioner, they'll formally close the company, and that might be the most tax efficient way for you to take that money out of the company. Now, generally, there's not many assets in a personal service company. It's normally just the cash in the bank. Now, if you've got, say, over sort of £25,000 of cash at the bank, then a members voluntary liquidation will be the most tax efficient way for you to distribute that money back to the shareholders. Now, if your company is not solvent, so it can't pay its debts when it falls due, you might have taken a bounce back loan, you might still owe some corporation tax, then you want to consider a creditor's voluntary liquidation. And this is where you appoint an insolvency practitioner to bring the formal end to the company. And in a liquidation, those debts to the corporation tax and the bounce back loan would be written off and included in the liquidation. So tomorrow I'm going to be talking about certain problems people are facing when closing a company as a personal service contractor. So I hope you found this helpful. Please give us a comment, please give us a like, please subscribe to the channel. Thank you for your time. My name's Chris Word, and bye-bye.